Well, hi everyone, Shaun Humphries here. Welcome to this edition of All Things Retirement. Well, in this video we're going to talk about an extremely important area around retirement income planning, and that's the impact of demographics and really an aging population in our country. Some refer to it as a demographic tsunami because it's going to have a very significant impact on our retirement planning. So I'm going to go over sort of the scope of the issue and just cover off some highlights around demographic changes. And then I'm going to talk about some of the implications and then how you can approach this whole area to effectively plan for these demographic changes. And so these videos really are just a quick prompt to get you thinking about different aspects of retirement income planning. Of course, demographic impacts will be one of those. Now, before we get into the discussion on demographics, again, if this is the first time you've viewed one of our videos, I'll talk about our model for retirement. So when you think about your retirement, it's not just about the financial numbers, it's much bigger than that. So we've found over the years that those people that are successful through their retirement focus not just on the returns they need and tax planning and cash flow, but they start with, how do I cultivate a sense of meaning and purpose through my retirement years? It can be a really exciting transition. For the first time, for many people, they have complete control over their time, how they'll allocate resources, how they'll use their gifts and experiences and abilities to have an impact on their families or on their communities. And so the cultivation of meaning is extremely important. Of course, health. You can never start too early around this area. It'd be a shame if you spent decades planning for retirement and then you get to it and you've lost your health and your ability to use those assets in a way that you wanted to in the first few years of your retirement in terms of experiences and travel and contribution. Of course, specific goals in the context of a retirement life are extremely important because the goals sort of set the track on which you're going to run on in terms of your cash flow planning. Obviously, goals cost money, and that's the first part to effective cash flow planning. Pensions are incredibly important, and our role for our clients is to help them thoroughly understand their pension options and how those options integrate to their plan. Of course, we look at investments. For many people, their investments are there to supplement pensions, both company pensions as well as government pensions. Tax planning is always important. We don't want to pay more tax than necessary to fund our goals, and then down the road, when we look at a retirement, some of us may be fortunate enough to have assets left over, and we can think about legacy. But legacy is also, do you have a power of attorney, healthcare directive, is your will up to date to make sure that, again, you've worked hard for your financial assets and build up a balance sheet. You want to make sure that it passes the next generation effectively. Okay, so that's our model. The first thing we need to think about when we take a look at the whole retirement area is asking us various questions. We've done this through the various videos. How much money do I need? What returns do I need? And the question today is, what's the impact of demographic trends on my retirement? So I'm going to cover a few pieces of data from Stats Canada. These are great charts because they summarize visually how the demographic landscape has changed. On the far left, you can see the chart goes back to the early 70s. And you can see the baby boomer generation in particular is at the bottom of that chart. Lots of people working, lots of people contributing monetarily through the tax system to benefits. And you can see at the tip of that pyramid is the baby or the retiree demographic group, which is age 65 and above, a relatively small percentage of the overall population. We go to the next chart in the middle, it's 2011. Again, you can see how the baby boomer demographic is kind of shifting up. Some of them are transitioning into retirement. The numbers of people putting into the tax system to fund healthcare and government pensions is shrinking. It's getting smaller. And the number of people drawing through the retirement years 65 plus has increased, about 15% of the total population. And then we go into the year 2060 and above. And you can see now it's almost like a cylinder, right? You don't have that bulge of people contributing. So there's way few people contributing through the tax system to healthcare and pension systems. A much larger percentage of the overall population who are retired above the age of 65, about 25% of the total population. So we don't have to be a rocket scientist to understand the financial implications of this changing demographic trend that's taking place. So when we look at various demographic trends, it was interesting, various think tanks have kind of looked at the impacts over time. Healthcare spending is one of the ones that's really critical. One of the articles that we used to put together this presentation example, in 2014, the average per person healthcare spending in Canada for those aged 65 and above was about 4.5 times greater than Canadians aged 15 to 64. So obviously, as that 65 plus demographic increases as a percentage of the overall population, it's going to have a huge impact on healthcare system over the next several years. This next chart is incredibly important to take a look at because it looks at what's called the fiscal squeeze. So as we see an aging demographic, again, we're going to have more pressure on the pension system, we're going to have more pressure on our healthcare systems. And the unfortunate thing about this is that our various levels of government are already struggling around their debt loads and their deficits. So if you look at the federal government at the time of this taping, their debt to GDP ratio was roughly about 30%. Now that is an okay number as long as your debt's not increasing at a faster rate than the growth in the economy. I guess that's okay. But the levels of deficits that have been accruing federally have been very significant. And what makes this matter worse is if you look at municipal governments and you look at provincial governments across the country, they're in a real fiscal squeeze. So there's growing deficits, growing debts, and they just don't have a lot of margin to work with. So if we add on provincial debt, municipal debt, and federal debt, and you add to this demographic tsunami, again, it's obvious that the impacts on the healthcare system and the pension system are going to be significant. And when you look at this chart, the numbers don't look all that great. So when we look at these spending increases over time, I'll just read from one of the studies that was put together. To put these spending increases into perspective, when combined, the higher projected government spending related to health care and income support programs for seniors, like old age security, will be equivalent to spending an additional $107 billion on these programs over and above the government's current spending in the year 2016. In response to this dramatic demographic shift and the resulting higher spending and slower revenue growth, governments across Canada will face stark choices. They will have to reform spending programs, enact policies to improve economic growth, run deficits, and accumulate debt and/or raise taxes. If governments, including the federal government, continue to choose deficits and debt, Canada's net debt to GDP ratio, which is an overall barometer of financial health, will not look very good at all. And it could increase to between 167 to 252% of GDP by the year 2045. Now, there's good news. And the good news is we still have a little bit of time on our side. And so, my encouragement to you is this is not a political issue, left or right. What it is really a numbers issue from the standpoint of what is sustainable. And if we don't really look in a very concrete terms and realistic terms on this trend, it could get pretty bad. Because not only do we have the basic health care and pension issues, but Alzheimer's and dementia are going up as a percentage of the population markedly as well, and putting a lot of financial pressure on people's resources. So that's the demographic squeeze, and that's the potential impact that we're going to have to deal with over the next several years. So what are the implications? Well, implication number one, healthcare spending is going to go up. Number two, the pension system is going to have more pressure put upon it. It's going to have an impact, number three, on when you decide to retire, and your health and energy is going to have a really big impact on this decision. We feel it's really, really important to model the sustainable long-term income that you can generate through your retirement years to see what level of income flexibility that you have to deal with these potential contingencies through your retirement years. So often what we will do for our own clients is engage in coaching discussions. And those coaching discussions take a look at various kinds of forecasts, and this particular chart is an example of the kind of forecast I'm talking about. We call it the gap analysis, but basically what we're doing is taking a look at your pensions, whether it's from your employer-sponsored pension, your government pensions, your financial assets, and we begin to model contingencies. What happens if if you're in a marriage relationship or have a partner and one of the partner needs to go into a long-term care facility for health care, and now you're running two households. in one household, your current principal residence, and then long-term care costs. Do you have enough financial resources to deal with that contingency? What about issues of increasing costs, as there's offloading from the federal government to the provincial government and then reduced programs or increased taxes? If you had a bump up in expenses over time because of that, can your financial situation weather that? Those are really important discussions to have, because it can lead to things like, I've had clients that have enough financial resources in the current reality to retire, but they decided not to fully retire. They enjoyed what they did, they developed second half careers, they decided to put less pressure on their portfolio, and as long as they had their health and they were enjoying what they were doing, they were basically semi-retired but still earning some income, pushing back the time when they really needed their portfolio in a significant way. And one of the reasons they did that was to deal with some of these looming demographic pressures that are sure to come our way at some point down the road. Well, I hope you enjoyed the video. Again, it's not a real optimistic forecast, but if you're beginning to think about retirement and you want to take into account such issues as inflation protection, longevity risk, market risk, and looking at the impact of demographic shifts in our population, then reach out to us. We'd love to start a conversation about how our coaching programs work, how they could be of help to you as you begin to plan in a very concrete way for your own retirement. You take care.